Good morning, ladies and gentlemen. Welcome to the 1 hour live webinar session brought to you by kclaw.com. As you can see on the screen today, we're going to talk about property, and we have two guys invited on board to kclaw.com to actually share with us some market updates for 2023. So the first guy will be our main presenter. He is none other than David Chee. So he's a REN, real estate negotiator with Reapfield Malaysia, and alongside with him, he is actually joined by a very capable panelist who is none other than Jonathan Lee. All right. So he is actually quite involved in both Reapfield Malaysia and right now KW Malaysia. So later, I believe that David can actually tell us more about the relationship between Refield Malaysia and as well as KW Malaysia in much greater detail. And of course, we have the fourth guy on the show, who is none other than Casey Lau himself, the boss. All right, he will join in as an active panelist, and he will actually come in, offer some inputs so that everyone gets some wisdom and insights to how we can actually best buy properties in 2023. Now, there are two house rules to adhere to when it comes to this webinar. Number one, if you have any comments or if you'd like to interact with us during this webinar session, please put your comments in the chat box. And if you have any specific questions, the more specific, the better it is. The questions, just type your questions or post it at the Q&A box. We will be addressing all your questions at the end of this webinar presentation. So without further ado, I'm going to just pass the control to David and as well as Jonathan later. But first, David. So guys, welcome to the show. All yours, man.
Thank you, Ian. Morning, Casey. Morning, John, and morning, everyone on the screen. So, before that, of course, I'll let Jonathan to introduce about what's the relationship between Reapfield and KW.
Right, I would do the introduction. I mean, Refield is a registered agency for the past 37 years in Malaysia. Household name. I think somewhere in 2016, 17, I was brought on board. They acquired my business, and I was brought on board to kind of revamp the whole company. And then we decided that there need to be some sort of a systematic approach in how we want to repower the business. And that's led us to explore Keller, which is the largest real estate franchise in the world for real estate agents in 2019. And that's when we took the licensing to launch in 2020 for Malaysia. Keller is actually a technology platform right now that powers real estate agent and agency to do their business by being tech-enabled. And probably that's a different topic away from today's conversation, but just to give an overview of where we are right now. We are leading in terms of technology in Asia. We have a complete inbuilt $150 million US budget a year technology that is being used right now globally. So our goal in Malaysia is to power agents through technology to better serve customers and better serve the consumer in the way we run our business as a real estate agent. So that's the Keller Malaysia story, and the Refield is just a real estate agency, right? So that's where we are right now. So that's just the example of what we have now. By doing that, what has happened in our business, right? Let's go for the next slide if you don't mind, David. Right? Yeah, you can go to the next slide, please.
Okay.
Yeah, I think what has happened the last 2 and 3 years has propelled technology has become a very important component in engaging consumer and helping consumer connect with the agents and connect with their property opportunities right now. I think the past 3 years, 360, for example, we have been using 360, we've been using Metaport, we've been using stuff that helps clients, agent, and properties all come and converge and leverage on technology to have a better opportunity for them to make better decisions. So I think that has changed the landscape. COVID has propelled, because traditionally real estate is a very traditional business. It's a belly to belly. I need to go and see and feel the house, see who's my neighbor, see who's behind my house, who's in front of my house, who bought this house, who used to stay here. We want to ask all these questions. But it has been a very slow moving, progressive a kind of way of doing business. But I think the past 3 years due to COVID, I think it has propelled digitization, has propelled the way we think about running our business, the way we think about a client looking at property, not only by search, but also by exploring through 360 and other things that agents and clients are interacting on technology. So I think that's the overview condition that we have seen the past 3 years in terms of technology, how it has changed the landscape, right? Now, what has happened in terms of our production, just to give you an overview of how our company has performed during this COVID time. Can I have the next slide, please? Right, you can see we have up month on month, we have up in terms of level of transaction. Can I have the next slide, please? Not this slide. Thank you. You can see as of this year, we have close to almost 1.6 billion transaction. Now, this is a very slow year, by the way. 2022 has been a very, very slow year. Generally, we do about 2 billion to 3 billion transaction a year, but this has been a very slow year. But yet, we are still able to see growth in terms of our number of transactions as a company for the country. Now, the nationwide, it's about 120, 130 billion, I believe, if I'm not mistaken. But this is where we are as Klang Valley is about 60 over billion. So we are doing about close to 2 billion of transaction on a year-to-year basis, right? So that's just a little bit overview of our company. Does that answer? David, want to chip in anything else, or Casey, want to ask any questions?
No, I think very clear. All good, I mean to say, so
Okay.
we can actually proceed further.
Let's go to the next slide. David, what's the next slide? Okay, there you go. Potential policies in place for local property market. Now, when people ask me questions like, oh, how is the property market going to look like right now? My answer is always, I haven't found my crystal ball. And in reality, prediction is very hard to make right now. But what we can see is important, that's important for us to look at right now is, where are we from an economy perspective? And I think we need to think about the whole property market as part of a big ecosystem of the macroeconomy of the country and also the global. Now, let's not talk so far away about global. Let's talk about local first right now. Number one challenge we have in the past 3 years is that we have an economy that is slowed down. We have inflation, we have economy that is slowed down. We also have policy that there's no policy. There's a policy that with no policy, right? For the past 2-3 years, we have been trending on really no policy. And I'm trying to be apolitical here, right? It's not about being political, but in reality, there was no clear policy in how our economy is going to start and how is it going to create impact in the economy. And the only thing that the government did the past 2 years was cash out and using our EPF money to drive the economy, right? That's really what has happened. Now, in reality, how is the SME, how are the SMEs like? How is the economy like? I believe we are in a very, very difficult and challenging time. So I believe potential policies, we need to look at macroeconomy for the country first before we talk about the property market. And I think based on what I'm reading right now, the first issue that the government need to solve is income issue versus expense issues, right? And we have a challenge here today is that because of the high inflation globally, income is a problem. Expense becomes very high. Consumer becomes difficult to spend more money because they have higher expenses due to inflation. So inflation becomes an issue, has already been an issue for the past few years. The challenge now is how do we fix that? The only way you can fix that is you can create more income in the country. So I believe, I hope the two things that the government needs to do right now, which I think they're working on, is how do we bring high income jobs into the country? Right? How do we increase the high income jobs and increase the high income investments into the country so that everyone gets more pay? That's number one. Number two, how do you then redistribute subsidies, which I think will be another challenging thing that the government is working on. Redistribution of subsidies, to me, requires a lot of political will because people won't be happy. Now, one thing I like about what's happening right now in the government is that they are making certain decisions that may not make everyone happy, especially we now form the Perpaduan government, right? So I feel that there's a lot of political will to want to make a lot of changes, which is a good thing. I don't see the next 1 to 2 years, the government will put a lot of initiatives to drive property because they don't want to treat property like a commodity. They may encourage buying, they may encourage selling, but they would not want to treat it like a commodity for more trading to happen. I don't see that happening right now. So I think the potential policy in play would be reorganization of the subsidies, looking at how to increase income into the economy. Because when you have high income, when you have redistribution of subsidies, money is spent correctly, you will have a better economy to support the whole market, right? That's what we need right now. And potentially, hopefully, one of the policies that the government can do is to encourage foreign investors to come in, which I think is starting to come in right now. I'm very glad that China has opened its market, everyone has opened its market. So there is a lot of potential opportunity and I'm glad that they didn't want to do the COVID test for all China people. I mean, all of us just have to accept that COVID is part of our life. We can't protect that, but having more free flow of foreign market coming into the country helps to take up some of the stocks that we have. Now, we do have a serious overhang supply stock that we have in the market. So this is what I feel some of the potential policies that will be in play for the local property market. David, any thoughts on your side?
I think that most of the foreigners, I think my clients start to encourage some of the things because I've been to China back then when during 2018. So I had an opportunity to speak to a few of my China clients from there. And we actually host a small property talk over in Beijing. So from there, we actually engage with a few of the China investors and all this from there. Then I think from time to time, they actually ask us about how is Malaysia doing right now and how is the policy of MM2H and all this. So from time to time, I actually update them on how is the thing working on here in Malaysia right now. Because some of their friends is actually already in Malaysia. So it's like one of my buyer, I had this buyer, very interesting one. So 3 years back when I was in a roadshow, so the husband actually gave her the money to go for facial, and she saw me in this roadshow, and then she came and talked to me. So within 30 minutes, then she actually spent 1 million on a property, more than 1 million, of course. Then the husband, when we had an opportunity to sit down to have a tea, the husband was saying that I actually give you 300 for facial, and in fact, you spend more than 1 million within 30 minutes. And from there, we actually became friends and all this. So from time to time, they are still interested in property in Malaysia, I would say.
Yeah,
so
I think there is a lot of fatigue in other countries where, for example, in China and Hong Kong, is a very strong hard lockdown, a lot of fatigue in some of their policies, and people are feeling that, is there a better place to live or not? Is there a better place to stay or not? And I think there is that opportunity for foreigners to look at Malaysia as an opportunity. And I hope if the government get their policy correct, the previous policy the previous policy, my apologies to the previous Home Ministry, but the previous policy for foreigner, the visa and all that was not very favorable. We were more expensive than Portugal and Spain and all that. So doesn't make sense. So I think how can they make Malaysia competitive, and how can we get more money to come in? And I think there's an opportunity right now. There is a lot of people from different countries who are looking to migrate for a certain season because of the current policies that's in their own country that is not the best for them in terms of how they feel about having a good lifestyle. So I think there's that opportunity for us to see that happening. So those are the policies that I wish and I think is in play, but we've got to see for the next 3 to 6 months, because I think right now the government is looking at stability. How do you stabilize the authority and the power and the distribution of roles in the various ministries? But I believe there are a lot of policies that's in place, especially policies that is evolving around subsidies and also certain financial aspects of the country. So I believe that I expect certain changes, and don't be surprised, we'll be paying more money for petrol. Some of us may not. Some of us may enjoy the subsidies, some of us may not. So those changes will create a different effect in the market for a certain period of time. But I believe that this is a good thing. It's kind of like an opportunity for a reset for the whole market. And I think it will attract foreign rating agencies to see Malaysia as having the right political view to make decisions that will help impact the economy. Because I think if the economy is not impacted, it doesn't matter what property you buy, right? The economy comes first before the property market. I believe the property market is the impact of the economy. So all of us got to find a way to help the economy go strong first, right? Even from a consumer standpoint. Right. What's next, David? What are we going to talk about? We are talking about buyer trends right now, right? Right. David, maybe you want to elaborate a little bit about buyer trends. What are the buyer trends that you are seeing in the data so far based on the transactions that you have been studying?
Okay. I think it's very relevant to talk about all these buyer trends right now, because I think it's beginning of the year, so a lot of the people actually are doing resolution and all this. So it's like my friend a few days back, I actually had a conversation with one of my friend, childhood friend. I'm talking about childhood friend. So he actually made a call to me, asking, hey David, I'm actually looking to invest in a property in this coming year. So I have this allocated budget. So I'm looking at somewhat in Klang Valley, even though they are not from Klang Valley. So a few of my friends from my hometown, actually, they are looking to invest in Klang Valley, because you are aware that there's a lot of the demographic and rental is very much different compared to Klang Valley and other states. Some of the other states like Johor, maybe they couldn't get the kind of rental rates when they invested into their property. So right now, I would see that from the data, we can actually see that there's about 30% of first home buyer, and most of them in the market, they are still taken up by the investors instead of other first home buyers. Yeah, can see from all this data is actually taken from our market center research app by KW. Yeah, and we also can see that this is the buyer's age that we can capture. So the buying age is starting from 20. So some of the time I had a buyer that bought a property from me. It's actually the parents buying the property for the children, for the reason of letting the children to have a taste of how's the commitment of owning a property like. So 1.8 million property, they are paying a 60% cash, 40% amount of loan just for the children to have an experience of how's paying installment for house like, how's owning a property like. So for this one, this girl, when she bought this property from me, she was 23. She was just a fresh graduate, and she was just started working for a few months time. But her profile and all this, it's okay. So bank actually granted them the amount of loan they wanted, I would say. Yeah. And from here, you can see some of the buyer's gender.
Yeah. David, you go back to the chart where you look about the age group part here. Yeah. I think this is a very important chart. Why is this important? It shows us the potential, right? Because from a demographic country, from a data standpoint, the median age in Malaysia is still not very old. I think it's still about 30, if I'm not mistaken, it's about 30 over years old for a median age in Malaysia, meaning there is still a young population that is looking to own a home. Our challenge is a lot of these young people are priced out of the market. That's our challenge, right? But there is demand for homes. For people to buy their own homes. There is a huge demand. If you look at the number of age groups starting from the age of 20, 30, 40s, right? Those are the active market. Those are the population that is an active population that is not aging. So we are not really entering aging yet, Maybe in the next 10, 15 years, we may see that aging population coming in slowly. But right now, we are still in a very young age market, meaning there is a lot of demand in the market for first home buyers, for first home investors. Everybody knows property is an important thing in their life. I always tell people, if you have a daughter, you normally say, if you want to get married to my daughter, make sure you have a home first. If you don't, then you don't qualify. I mean, there is that kind of thinking in predominantly culturally is where we are right now. But what's important to see is that there is a healthy amount of the seller and buyer coming in together, switchings, and there is also that opportunity for us to look at what would that look like in our investment for the next 5 to 10 years. If I buy something, who would the buyers be? What kind of buyers would that look like for us as an investor today? So I think the age group is pretty interesting. What's the other slide? The one that comes with that round thing. Yes, there you go. Yeah. Gender, I think, is irrelevant because it's subject. It's really subjective. But what about the trends that you put in the just now, David, about the location and all that? Right. So if you look at this particular chart, it just shows that residential is still the number one location, the number one subsector for properties in our market. So if you are a simple investor who are looking to look at investing your first home and all that, make life easy, find a residential property that is high demand and with good rental yield or reasonable rental yield. I think rental yield is very subjective today. In my day, I'm not very old, but 10, 15 years ago when I invested in property, my standard was 8 to 12% rental return. That's not possible today. It may be possible, very rare, but it's not possible today, right? So what's a good rental yield? Think about it for yourself. Some people say, if I cover my cost of funds, that's great. If it covers 60-70% of my installment, that's great. So whatever it is, rental yield properties are probably the best option for you to look at in the next 5 to 10 years, because you know that there is going to be young generation coming up in the next 5 to 10 years that potentially would be the buyers of your property. So I will look at residential as your number one consideration. My advice to everyone today here, if you're looking at this kind of trend, right, try to stay away from funky properties. When I mean funky properties, would be properties that is very weird. It's like supposed to be residential, but it's not residential. Supposed to be commercial, but it's residential. So it's those complex kind of development. I would stay away from those things. When I look at integrated development, I'm very concerned today because the cost to run integrated development from a development standpoint and also from a management standpoint becomes a challenge to maintain the value proposition that is original. I would stay with hardcore residential if that's for me, because I'm a bit of a conservative person. I would advise people to look at integration very, very, very carefully, unless it's very established. So be careful with those funky properties. I use the word funky is because they are sometimes seem to be very great, but actually it may not be very great. I'll be very careful with those properties that tells me that, hey, in this particular whole block, there's one block is going to be blocked out by the hotel. Actually, the hotel only took 3 floors, right? And the rest are still owned by other people. So I want to be careful with those kind of developments and those kind of properties, right? But go back to the basic. And I think the next 5 to 10 years, we need to go back to basics to protect our money, because the original objective of investment is to protect capital and use your capital to grow your capital, not so much of speculative buying right now. So I believe speculative buying season, it's not the right season right now. So I think that what else? There's another trend you show, location, right, David? Right, so these are some of the top 5 hotspots in terms of median price per square feet, meaning it shows that there is growth in the median price. And you can see they are all residential location. They are all places where the local market is in demand. The market is demand. So go back to basics like Setia Alam, Bukit Raja, Klang, Bandar Utama, Kinrara, Sentosa. So these are all places where people wants to stay. So I would invest in those kind of properties right now. These are good opportunities for you to look at. If you can find good deals here, good opportunity. There are always going to be good deals because of the current market condition. We don't know when there is a pressure in the market condition, sellers are pressured to sell sometimes. So there's an opportunity for you to explore. But those are the 5 hot spots. What's the next one? Right. These are the 5 hot spots in terms of medium price that we saw in terms of stratified, right? Am I right? Is this stratified? Correct. This is based on stratified. So we look at landed, we look at stratified properties as well. And you can see that there is growth in some of these locations where there is high demand for own occupancy. So go back to basics, guys. What I'm trying to advise clients today, and even my own agents, when I ask them, real estate agents, you should be investment. You should be the first person to invest in property before you earn the right to tell people to invest in property, right? And I always tell them to go back to basics. Go back to basics where the demand is high, where people want to stay there, and where there's traffic jam, where the concept is simple, it's not complex. So those are the things that I would advise people to look at based on the data we are seeing right now. And the market is still transacting, it is still moving on. It's not something that is stagnant. We still have a property market that is in play. It's just that the days were gone where everything else will just fly, right? It's not going to be like that anymore. It's all going back to fundamentals. Fundamentals where the market demand is, where the property, where the prices are in match with the consumer expectation in terms of their ability to buy. Right, what's next, David? Housing price trend. Right, so when we look at the housing price trend, I don't have the latest data. We are waiting for 2022's data. But based on what we are seeing in the last quarter last year, we are seeing that the house price index is inching downwards. The house price index is inching, meaning the house price index is showing that there's a potential change of price downwards. There is a pressure on price. Now, how much pressure? What does that look like? The challenge with Malaysia is our data is very generalized. It's not specific. Now, if I go to Desa Park City, for example, that may not be the case because there is high demand there. But what it shows to us today that there is a huge oversupply in many locations, meaning you need to be very careful when you look at buying properties when there's oversupply. Cheap doesn't mean it's good. Value buy doesn't mean it's really value buy. So for example, if today you go into a location somewhere north of Shah Alam and they say it's Subang West or whatever they call it, right? And you see the whole block of condo there, everything is 35% down, but there are 200 units available. You want to be very careful in buying those properties. You want to make money, buy the whole 200 units. If not, buy one unit, you'll be stuck. So be very careful on what value is, because when we are in a market where there's just too many supply of things that people are not in need or not using, you have a challenge. So that's why I like to go back to basic. I like to go back to fundamentals where it's not as sexy as those trendy properties, right? So go back to that. So the house price index is looking downwards since last year. Now, is it going to go back up? I'm not sure. I believe it's going to be flat or down in the next 1 to 2 years due to the current economy. Unless there's a serious change, a systemic change in the entire economy that suddenly increase the income, which I don't see that happening in the next 6 to 12 months. You may see gradual changes in the economy, and I hope that that policy will come to play. But having said that, I believe we are going to see a pressure, which to me as an investor is a good opportunity, right? Warren Buffett said, be fearful when everyone is greedy, be greedy when everyone is fearful. When the market is under pressure, is the best time for you to look at property. It is the best time to start looking at investment right now. It is the best time. The thing is because you have more opportunities in the market than before, because of this pressure that we are going through. So it's a very unique situation, right? What's next? Right. So you can see that the price trend in terms of KL and Selangor. You're going to focus on Selangor. Can we go to Selangor first? Selangor to me is a major thing. You can see that in Selangor, the prices, the transaction is down, the prices are down, median prices is down. You can see that the trend is trending down in the state of Selangor. Only thing that's going up is a bit of commercial development land and industrial. But you can see overall there's a trend down in terms of the prices and the number of transactions, which is in line with the house pricing index from a national level. But I'm looking at Selangor level right now. You can see that it's trending down. Meaning it's a good time to invest. You want to buy when it's low, right? You want to buy when it's high. So it's a good time to look at, invest, and start searching. Because someone's going to make a lot of money when the market recovers. So when you are looking at, for example, total transaction down 70%, meaning there are lesser transaction in the market, but there are more stock available, right? There are more opportunities available. So that's where you want to consider looking at. And the median price is down 17% for residential in Selangor. That's a double-digit down in terms of median pricing. Next slide, please. Go to KL. Let's look at KL. And if you look at KL, it's pretty much the same. Just that the median price is up. Demand is still there. As I said, the KL market, the KL market is a strong market, but you can see it's only up about 1%, but the volume of transaction is still down. Meaning there are lesser buyers in the market, or there are lesser ability to buy in the market right now. And you can see that the trend for residential is inching down in terms of number of transactions. When the transaction volumes drops, likely median price will drop. Likely you will see adjustment in price. So I believe that these two data is really helping us as investors to look out and start thinking, what's the best opportunity for us today? How many of you are looking at opportunities right now? So if you are looking at opportunities right now, I suggest that you start searching and start thinking about it. And you can ask questions later. What do you think is a good opportunity? And I'll be open to answer. I've been answering a lot of questions the past couple of years to some of my investment friends and my investor clients that I used to serve. I don't do the sales anymore, but I just advise them. And a lot of them are asking me, when should I pull the trigger? My answer will always be, when you find the value that you think is the best value for you for the next 5 to 10 years, pull the trigger, because you won't get the same chance anymore, right? Due to this situation that we are in. Right. What's next, David? Anything else you want to add, David? So what's moving forward, David?
That's a very good question. Has to cover a lot on how's the trend going to be like in the next 1 to 2 years.
Right.
Yeah. So, Casey, you have anything to add on from here? Yeah. Okay. Yeah. Anything to add on from yeah?
Not really. I mean to say, after all, I mean to say, I guess that you guys have more insights to what's moving on or what's moving ahead in the property market. I mean to say, I don't have the. I mean, say I wouldn't have I'm not the best person to actually come up with that thing, because when it comes to property, I guess for a layman myself, right, as a layperson speaking, we are very fixated to our local market. So like, for example, if I live in Shah Alam, I'll probably know best what's in Shah Alam, or what's best in Subang or something like that, somewhere closer to home. But if you ask me about Ampang, Cheras, I won't know. So I guess I will have to leave it to you guys lah. All right, to actually inform us.
Right. Yeah, I think moving forward, I think one of the trends that what's the next slide? I think the next slide we're going to talk about some buyer tips, right? Yeah. I think liquidity is very critical. One of the good things about Malaysia is liquidity is available one. We always have the idea that, oh, loan is difficult to get. Actually, that's not true. there are less people qualifying for the loan, able to qualify for the loan. That's the challenge. But I believe liquidity is still very available for a lot of people today. My first advice to people today on this channel, again, I don't know, we all come from all walks of life. Some of us here are more advanced investors. Some of us are more beginner investors, right? But eventually, at the end of the day, right, it comes back to what's the amount of liquidity that you have available for you to pull the trigger. So I think the first thing you need to fix or need to be clear is the liquidity or the availability for you to get credit, or the cash that you have. If you can have cash, great. If you can able to get credit, great. But be clear what liquidity that you have, so that you know when you go into the market, what's the ROI or return that you can set for yourself in the next 5 to 10 years with those liquidity. So I think financial planning, I noticed and I observed for the past 20 years of my career in real estate, has been a very big gap in investors. We go in thinking this is my entry level. I get my loan and I just go straight away and buy. Hopefully something great will happen and I make my money. Now, if you were there in the early days of 2005, 7, 8, 9, 10, maybe you can probably do that very well. But I think in this market currently, be very careful. So liquidity and understanding of financial planning is, to me, the number one focus that you need to think about before you start pulling the trigger. If you are investors, depending on which level you are in, but I feel that's important. Financial planning is important. You need to know your risk reward appetite. You need to know what you can afford, what you cannot afford to take risks, so that you know what you're going and what you're entering into. I think that's the first tip I want to give to all our listeners and audience here today. The second thing is to talk to many professionals in the field, to speak to people and build a resource of people or expertise by location. Just like what Ian has just said just now. I am from Shah Alam. I only know Shah Alam. Great. Find an agent in Shah Alam that is good. Find a real estate agent or find an investor group in that location that knows that place well and learn from them. I think community is very critical right now in order for you to protect yourselves from making not so good decisions. Now, you cannot, it's not foolproof, but it's one way of you to look at. I'm in the community of, I used to be in the community of my location where I invest a lot. It's called the Mont Kiara area. I used to invest a lot there. Now not enough money, so don't invest anymore. But last time I used to invest a lot in Mont Kiara, right? And there's a community there and there's this conversation there, and every agent, I know the best agents in those particular blocks will give me information, right? So I think having those kind of insights are very important. We just get to be a little bit more hardworking and diligent to build that community. And I think that community is very critical because it helps us to be more informed and smarter and faster, right? You get to be faster and smarter in a short period of time. So I think those are the things that I would suggest. The third thing is, if you are very cautious or you're very worried or you are not the most adventurous person, but you still want to invest, right? Go invest in prime location. Pay premium to take away the risk. Invest in prime location. Prime location meaning your PJs, your KL Central, your Subang Jaya, your Mont Kiara. So some of these places, right, where there is definitely demand. So high demand location. And I like to tell people, right, one of the indication of I actually make a statement in one of the age event 2018, 2019. Everyone was laughing at me because it was the headline on the publication of City and Country that day. And I said this, I said, if there's no jam, don't buy. If you want to buy, I said, if you're invested today, if that location got no jam, don't buy. It can be a very beautiful city, but there's no traffic jam, there's no human impact, there's no economic impact there, don't buy. That's not a good place to invest. So buy prime location, very prime location. You won't go wrong. You won't make the most money because you pay a premium to stay in there. But through time, you will definitely make back your capital and you'll definitely get better returns. So that's where I would advise people to buy. I will stay away from high potential right now. I will go into premium and I will go into safety in the next 5 to 10 years. That's my tips for home buyers and investors. And how about you, David? You got anything to introduce to us?
Okay. So coming forward, because I remember the short article that you posted on Edge about no gem, no buy. So I'll recommend a few of the new launches around in KL and PJ. Those are the launches that nearby to public transport. I would say LRT station or MRT station. Yeah. So I wouldn't talk about so much about the development. I will make up a few stories because it's relatable to my experience, or whether it's my whether be it memories or because of food or whatever in this few location that I ever experienced in this place. So KL Central, this place is actually very amazing for me. Because I think for some 10 years back when I was still a student, so I actually had to take a bus from KL Central to KLA to fly to Labuan. So when I reached KL Central, I have to grab a meal. So when I went to the coffee shop, right, so I thought that, one herbal tea probably costs about 150, 120, something like that. But it's amazing. I got a shock actually when I went into the shop. It actually cost me about more than 2 ringgit for a cup of tea. But the problem is that when I look at the crowd, it's like, oh, it's non-stop one. The shop is always packed and full. And then you will be like, oh, okay, so why is it so? But when I started being in real estate in KL, then I realized that, oh, there's actually reason because of that. Then you found out that there's a lot of MNC status offices around this area, and then the commercial shop, I'm talking about commercial shop that's around the area, per square feet, they are renting at about 10. Yeah, so to cover the rental and all this, so in running business, you can't be expecting that, oh, we're gonna run it in loss. So all this they have to factor in, and then there comes the price of the food and all this. But there's also to talk about there's limited supply in this area, because when we talk about investment and all this, we need to do a lot of area studies. How's the demand and how's the supply around this area is like. So if you're talking about residential area, so basically there's 3 main residential in KL Central itself, or else you have to stay away from this area already, like Bangsas and all this. So if you want to move around in KL Central, like you want to take train or whatever, I always told my friend, KL Central is always the place where you can go up to north or go down south to Thailand and Singapore. Yeah, this is where you can board on a train, or even you can took a bus or train to the airport to fly to wherever you want to go to. Yeah. So currently, there are still some, I wouldn't say there are much units that are available because the development is about completed already. Yeah. So basically, there's only maybe some less than 10% units left remaining, but you can check it out. Yeah, for this one. So I'll move on to the next one. Is there anything that you want to add on from here? Okay. So for PJ, okay, PJ has been always the place when you think of a char kway teow and all this, because the food is always available here. And I'm a person who likes to hike. I like to go for hiking in Gunung Gasing, Bukit Gasing and all this. So whenever I came down from after hiking and all this, right, straight away I will go to PJ and grab food because it's nearby and all the food is available. Then talking about this Atera, this is actually nearby to LRT station. It's Asia Jaya LRT station is some 400 meters away. So the developer is going to build a cover walkway and all this to the development itself. So one thing special about this development, I think not much of the developer will do this. They are actually putting in smart home system package for the home buyers. So if you are doing your own home renovation, right, you probably need to spend about 20,000-30,000 to build the whole system on your own itself. So this one, you are just buying it and then you get the whole system to yourself already. Yeah. So this place actually, I would say, the last time when I visited a BNI, then I actually bought on a train from the train station itself, because it's just opposite at Hilton Hotel. This place is actually nearby to Hilton, Sheraton. And then if you're talking about all the companies, Axis, Menara Axis office is just nearby. Then Plaza 33, and there's this few of the churches are around. And also, if you're talking about now, you are driving past Federal Highway, you actually see one of the company that is very appealing around this area. Right next to you have Ferrari and all the showrooms around, and now you have Custom. They actually took up a lot of the plots in front of the area. You can actually see in the area itself. Yeah, so that's how I talk about PJ to my. And then we are talking about central PJ. So if you want any other options, probably you wouldn't have too much option around there. Then we actually one of our colleague actually transacted a plot of land nearby. So we actually have an idea that if the developer is going to build something around the area, it's going to probably cost more than this, maybe probably some 10-20% around that. Because from the pricing of the land acquisition, then we can foresee that how much the developer is going to build on a plot of land itself. Because for the cost and all the application approval and all this, it takes a lot of money to do it. It's not free. And then building material cost is increasing year by year, I would say. Yeah. Then coming to the last one. Okay, I put a star in front. I want to put the disclaimer here. It's not the highest recommended development here, but because of this development, they don't have it's not launched yet. So what happened is that the developer is still doing some pre-launching and all this. They are still doing some application with the local authority and all this, still getting approval. So, but they are expecting to launch by this year. So if you are talking about PJ, then some of the time you probably talk about, you wanted some freehold. So this is the place. And then this is the place where you actually get a lot of shared amenities and all this with the high upscale neighborhood. Like, because Desert Park City is just opposite. Desert Park City has always been a place that I would visit during weekends for drinks or maybe for a meal, or even during Christmas time. I actually spend sorry, not Christmas, during New Year. I actually visited the place, then I actually went there to sit down, and then I actually sit there and look at all the dogs. I wanted to grab a drink, but I didn't, so I just sit down there, look at the dogs, look at the whatever is there. So if you wanted this kind of development, then probably this is something that you'll be looking into, because this one is actually the developer is going to build a link bridge and car walkways to the MRT station itself. So it's 300 meters away as well. So of course, you're talking about investment and all this. You have to look at your appetite and what's your affordability and all this. So you don't want to buy into something that you're expecting. Okay, I can afford a 2,500 monthly. Then I straight away I put in all the money into the basket itself. But you have to be aware of what you are looking into. But of course, there's this thing that I read about a few days ago that coming time, if you can't afford something near around your office. So say your office is around the city location, be it KLCC or somewhere nearby, or Bangsa South. Because people then would actually choose something nearby to the train station for them to continue to travel to work, instead of buying something nearby for them to, if they can't afford that. I'm talking about affordability and budget here. Of course, you want to keep it up to your lifestyle, and also to have a comfortable place for you to stay and move around also. Just up here. Anything that you want to add on from here? If not, then we move on.
I think some of these developments that David has recommended is just an example of what I think is a simple property. It's not complex. It's not funky. It's not a lot of funny spaceship kind of look kind of property. It's very simple. remember, the more complex the property you look into as you develop, as you build, the more expensive it is to manage and the more challenges it will face post-development. So important for us to look at things to be simple, not funky, prime location, places where people would want to stay and can stay. Yeah, so I think those are the things to look at. Those are just examples. Thank you, David, for sharing. I think we are pretty much there in terms of what we think about the market in general, Ian and Casey. If you want to have any questions for us, or is there any questions that we can answer from the panelists, sorry, from the panelists, but from the audience or the attendees? Is there any questions that we missed out? Maybe you want to bring it out.
All right. So once again, I would like to first thank David and Jonathan, especially Jonathan, for bringing us so much insights on the property market for 2023. Guys, this is the time to actually ask questions. Of course, on my side, we have actually gathered quite a number of questions, and I would like to address them right now. So guys, I mean to say, as we address the current questions that we receive, please continue to actually post in all your questions to both David and Jonathan, and hopefully we can actually address as many questions as possible. So guys, I mean to say, here's how it's gonna work. So what I'm gonna do is that I'll be asking a question. Maybe I will just who would like to go first? Maybe let's do it alternate. Let's do it this way lah. All right. So I'll ask a question and then I will direct the answer, the respondee, to either Jonathan or David to go first. And subsequently, the next speaker will be able to actually, if it's Jonathan first, then David will chip in subsequently. And if it's David, then Jonathan will chip in subsequently. And of course, Casey will be the third person to chip in, all right, after both of you guys. Okay,
right.
So let's start with a simple question. So the first
maybe
one
David will stop sharing screen first.
Yeah.
Yeah, sure. There you go. Okay, so go ahead. Sorry.
So let's start with the first question. This is by Haris Mount Nordin. So she is actually asking, is Soho considered funky? Let's start with Jonathan.
So Soho itself is not funky. Soho is just the way the property is defined. But how does a Soho look like? Where is it look like? So I give an example. If you bought into Soho, Acoris, Mont Kiara, you will make a lot of money, right? So you have to look at the whole development as a total, not just the description of one particular subsector. Soho is just one thing, but how is the whole development look like? Like, for example, if you're familiar with Acoris, Mont Kiara, the Sohos have yield a lot of money. Whoever bought from the developer have yield easily 30, 40, 50% gain. Rental is high. Good rental yield. So that's an example. So I would look at the whole development in totality before I can give you any comments on that. Generally, nothing is wrong with Soho. I don't say anything is wrong with Soho, but if the Soho is not in the right location or is not built in the right form of planning and development, then it may not be a good Soho, right? It may be a funky Soho, or it's a funky Soho somewhere outskirts or whatever, right? So that's funky. So I would want to pre-qualify to understand more. I don't have enough to understand the what do you call that to answer your question. But yes, I would consider looking at the thing in totality.
How about David? Any inputs to this question?
I think one of the things is to look at the location itself as well. Yeah. So some of the time, if it's in good location, like I've seen actually some of the places when they use it for actually quite good. I mean, the occupation rate is quite good if the location is right. Yeah.
All right. Okay, so as we have more questions, let's just move on. Yeah. So okay, this one I think all three of you can participate. Okay, all three of you. All right. So Danny Wong is asking, very simple. then you just give your inputs. Make it short and sweet as we have a lot of questions. Danny Wong, is Cyberjaya investable? Start with David first.
Okay,
Ah.
Cyberjaya, there's a lot of supplies around the area, I would say. But if you are looking at condos, of course, some of the I would say landed is doable around the area. Because actually quite a lot of people when we actually did some of the developments around the area, then we actually realized that some of the people when they couldn't afford something around Puchong or they wanted something new, or they wanted freehold. Then if you are talking about Puchong, Bukit Kinara and all this, all the landed is starting to launch at about 1.2 or something. Then people start to move to Cyberjaya and they realize that actually 1.4, 1.5, they can actually afford a freehold semi-D. So they actually start to move forward and then they started to accept the kind of property in that area itself, I would say. Yeah.
So the way I look at Cyberjaya is that Cyberjaya is the extension of Puchong. Puchong is the extension of Subang. Subang is the extension of PJ. I look at it that way, right? In that sequence. So the south side of Cyberjaya, it's kind of like the extension of Puchong, but a more organized location. Is it investable? I believe if you look at landed properties there, in the next 5 to 10 years, I think there's a lot of opportunities there because landed property still has high demand. We still want landed property and we want quality lifestyle. One of those few areas that you have, if you go down there, you can actually literally cycle and be safe. I mean, if you're a cycling person, that's a good place to be. So lifestyle, healthy, active lifestyle is a new trend, or is a trend that will prevail in the next 5 to 10, 15 years as people are more aware of lifestyle, healthy lifestyle and all that. Now, I'm not that kind of active lifestyle person. Maybe Casey is, but I'm not. I see his posting, always go cycling, all that, like the kind of active lifestyle, right? So there is that kind of demand that you can't have some of those things in Puchong. It's a bit different, right? So there is this opportunity in Cyberjaya. It is investable, but you'll be very careful, Danny, to look at, be very clear what your goals are. 5, 10 years horizons, 3, 5 years horizon. What is that lifetime horizon you're looking at in terms of investment that you're looking at? What type of returns that you're looking at? I think landed properties are a safe bet over there. Condos, I'll be very careful because there are a lot of choices there. Cyberjaya for many years has been a policy-driven location. Back in the Tun Mahathir time, that it's supposed to be a tax-free haven and for MSC status companies and all that, but those things are no longer in play very strong right now. So I'll be very careful on some of the investments there, but I will look at landed property as an option because I think it's an expansion of Puchong and you will always have not enough landed properties in Klang Valley. So that's how I look at it.
Casey, what do you say? Cyberjaya.
I have properties in Cyberjaya. So I have condos and I have a commercial property as well. So my experience is that the commercial property takes quite a long time to actually get to the mature stage. So in fact, a lot of holding power required. So it's been quite tough for the first few years. And but now it's okay for the commercial one. But then my condo property, the yields has come down due to like many more supplies coming up. So I used to be able to rent my condo at quite a very good rental yield. And powerful due to the COVID and things, and students are less. So if you are buying the condo for the student market, I would say I don't think it's a very good investment to me, frankly speaking, because if I'm going to do the whole property investment again, I will not target the student as my target tenants. A lot of management required. So it probably is more hands-on. So if probably my advice would be if you are going to invest in Cyberjaya, so bear in mind who are your target tenant are.
Yeah.
Okay, so thank you so much, guys, for your insights when it comes to Cyberjaya. Actually, I mean to say we have a lot of questions related to all sorts of places lah. All right, everyone seems to have a question to ask when it comes to what's the property market like in Johor, what's the property market like in Puchong, do you think that Bukit Jelutong is a good place to invest, etc., etc., etc. All right, so perhaps I mean to say I will rephrase everyone's question. So the thing is that, let's say for example we look at the location. For me, let's say for example, let's just take Shah Alam as an example. All right. So the thing is that you guys can say that, oh, Shah Alam can be either a good place to invest or may not be a good place to invest. But then from there, it's also about what you know about Shah Alam that gives you an edge when it comes to investing in Shah Alam. Because if you are from an outside, if you're an outsider, maybe you have less exposure to the latest happenings in Shah Alam or something like that. So I mean to say, perhaps guys, I mean maybe starting from Jonathan, you can actually give us an insight, regardless where you are at right now, be it in Puchong, Penang, Johor, Klang Valley, any parts of Klang Valley, or even Negeri Sembilan. When it comes to location, right, how do you actually from there choose the best of the best not to say the best of the best, but the most suitable properties in that specific location? Maybe Jonathan first off.
Right. So I think number one, it goes back to fundamentals. I have to make peace with myself that I know I will never make the best investment. Meaning, right, I will never catch the lowest and make the highest. I got to make peace with myself with that case. What does that mean is I can accept that I will miss out on deals and I will not get the best deal. And that's life. As an investor, I think you should think like that. The minute we think is, I only want to win, I don't want to lose, that's where we get into dangerous mindset thinking about investment. Because investment is to put money into play, it's not to play with the money. So when I look at location, I ask myself, what's my goal? And everyone's goal in investment is very different. For me, for example, I used to have this rule: whatever investment I buy into, I must make money when I buy on the spot. Meaning it has to be profitable for me when I buy in. Right? That's my rule. So 20%, or 30% or 15%. I used to have a 30% rule. If I buy in today, I must have a 30% profit on paper when I buy. Right? And then when I exit, if I do exit, what would the exit look like? Now, that's my rule. That's why financial literacy is so important when we look at investment. So then when you stick to this kind of set of rules, right, it's applicable in all locations already. Yeah? Right? So I would think from that perspective, because you will never catch the best deal one. There's so many deals in the market that we will all miss out on. And you will say, what's the best deal? Why can't I get that deal, right? So that becomes very, very elusive and very stressful and not practical. So the practical is set what is your goal, what rules have you set for your own investment, and you go execute based on that goal. That's how I look at investment. I look at it very objectively and not very emotionally. Oh, great, my friend bought this property 20% down the below market value. I missed out. Great. I'm always looking at when am I going to buy, and when I buy, what is the win that I have. So that's my rule. I will never buy something that's above market value. I will never buy something at market price. That's my rule. So what's your rule? Set your rules first. Location will give you this kind of opportunities, because when you are clear upfront what's your goal in investment, then you know. Second thing is, I will set time frame 5 to 10 years. Is this something that I want to buy to exit in the next 5 to 10 years? Now, I have this rule here. I used to have this rule that I always argue with my wife, is that all my asset is for sale one. Seriously, if someone walk into me today, the house I'm staying today, if KC were to walk in and say, I love your house, I will pay you 2.5 million for it, I will sell to you today, KC. I wouldn't think twice. Because I have a rule, if I make above this number of money, I will exit. So I'm very clear about investment. Investment should be like that. It should not be about emotion. And that's where the challenge is, right? So I'm very clear, and I have done it before. When I put all my property is always for sale at this price range, at this is the value lah. The minute someone pays me, I can tell you I've moved 9 times in the past 14 years. Why? Because when someone pays me money to move, I will move. So that's my rule. And when I realized as an investor, when you stick to a certain set of rules, you tend to make less mistakes. Now, the only property that we bought above or at market value was a property because I need to buy for my parents to stay. My wife insisted that we bought that one. So we bought that one. We saved money. We forced money to buy. That was the only one that today it's not at the best value. But whatever we bought upfront, everything else that I bought the past 15, 16 years has been this same rule. You must make money when you buy property. That's my number one rule. And anything is for sale at any point in time at this range. If this is the 30, 40%, if someone is willing to pay me 30, 40%, 50% premium to move out, I will move out today. I'm not kidding you. I'm serious one, right? That's how I look at investment. I don't know whether the answer is the question. It's not about the location, is just the place where I get opportunities, right? But the mindset of an investor should be thinking like that. What's the goal? What's your objective? Because if you're not clear about your goal and your objective, accumulation of wealth becomes a challenge because you don't know how to accumulate, when to accumulate, what to accumulate. And it's a lot of running around and looking at a lot of things. That's how I look at investment. I don't know whether I answer your question, but that's my simple way of thinking of investment.
Yes, I mean, definitely. I mean, I say that's the kind of answer that I'm also quite like and expecting lah. Because I mean to say today I can actually say, let's say for example, Jessica Wong, which location in Puchong area is good for investment? So the thing is that, let's say if all of us give an answer, right? Does that mean that all of you guys will actually jump into Puchong and let's go and hunt some deals in Puchong? Right.
Let's do a test right now. Let's do a test right now to this crowd. Let's do a simple test right now. Let's look at Puchong. Let's say Bangda Kinrara. Right now, the market, assuming today, I'm just assuming, this is hypothetical, assuming market value of a landed house right now is 900,000. Double story link house, freehold. Today, someone wants to sell at 700,000, want to sell 600,000 right now. It's 300,000 less. How many are you going to buy right now? How many of you are going to buy that, right? Pull a trigger and buy today. How many are ready to pull the trigger and buy today?
So Edwin says buy, Tay says buy, Chow says buy. Well, everyone.
Is that simple? Is that simple, guys? It's so simple. Isn't it easier than to predict the future? Or what's going to happen 3 years down the road? How much price index will go up? But it's so difficult to predict the future, Like I still haven't predicted my future yet, right? But you decide right now. But who will sell? Then you have to look for it. That's the thing, right? In this current market, you have to look for it. You have to work hard. As an investor, you have to find value, right? You have to go out there and find value. So that's the test I always tell people, right? Then that's the kind of investment mindset you must have.
Actually, but who will sell, right? No lah. I mean, this is just a conversation because just now you show some data A lot of people who will buy, right, they are in their 30s because starting a family right? So starting a family, most people might buy a piece of property for their own stay. Then when you look at the data, those who will sell are usually in the 50s or 60s. Maybe because is it true to say that? Is it because they want to liquidate for retirement, or they want to liquidate for kids' education?
So let me give you my view of this industry, or the whole thing about human psychology. Every 7 to 10 years, National Association of Realtors in the US has stated, based on data analysis for the past 120 years, every 7 to 10 years, an individual will make a decision about property for whatever reason. I give you a classic case of this property I bought in my house right now. This is the one I'm staying right now. I'm talking to you from right now. The owner was a foreigner who bought in at a very high price. COVID came, or before COVID, this is before COVID. This is then came, he has to leave the country because of certain reasons. He had no choice, but he wants to liquidate because it's all cash stuck inside here. Market value 1.4 million. I bought it at 1 million.
Wow.
It took me half an hour to make a decision. The thing is this, I was sitting down in the Chinese New Year dinner. One of my agents told me, boss, this deal is coming on the line. What do you think about this deal? I look at the deal. I say, okay, tomorrow take my wife go and see. Take your wife go and see. When you bring your wife go and see, things happen. Then I saw in 30 minutes, I pull the trigger. I say, okay, 1 minute I buy. Many reasons, there are many reasons that people sell why we don't know why, but we know in the next 7, everybody, every individual on this planet in the next 7 to 10 years make decisions about their property one. For whatever reasons, I could be unwell, I could be transferring out of the country, I could be leaving the country, I could be migrating, my spouse passed away, I had a divorce. So many reasons out there to come to this decision. Now, this guy, I have not met him before. He is not staying in Malaysia. The agent, he cannot sell for 2 years. I made him an offer. He bought it straight away. So I'm sitting on 400,000 liquidity what do you call that, equity right now on my property because I pull the trigger because that's my rule. I have a rule when I see it. I know this is a property. By the way, it's 2,400 square feet. Private lift lobby in Mont Kiara. I think cannot go so wrong right? But it's 400,000 in equity, So the thing is this, the opportunity happened, and I can tell you how many times I've met opportunities like this because I was looking. So it's a mindset. It's not so much about desperate seller, it's because the situation needs that person needs to sell. And you will have people like that one. Because property is not very liquid. Therefore, when it's not very liquid, it is more difficult to move the property fast. So there are people who wants to move the property fast. They need to make certain decisions like this. I can tell you guys, there are plenty of people out there. It's just that we're not looking. It's just about looking. It's just if you want to be a good investor, be a good student on the market and start looking.
Right. David, Casey, any add-ons to this? How about Casey? Do you have any add-ons?
Totally agree with what Jonathan said. Yeah. It's about the hard work you put in, right? Look at all the properties and be always ready in the market, always have the fund ready to buy if you are a property shopper. So I think like people like Jonathan, you definitely have an edge because you are in the industry, right? So how do you help your investor then? Like I guess you also have your handful of ready investors who that they have cash. So if you cannot buy the deal, you will introduce the deal to them, right? You do that too, right? Is it?
Right, definitely. And it all goes back to data. I say, look, this guy is 30% down the road. I look at data I'm a very data-driven person. The market has been transacting here at this value. This is the current value. You want to pull the trigger, you pull the trigger. But again, when you buy in low, you tend to have lesser risk. And it's easier to commit to something like that. Versus I'm buying in with the hope of a future, right? So that's where the difference is But yes, there are people who are willing to pay, and some people, whatever you do, also don't dare to pull the trigger because they're always afraid, right? And it's okay because that's not their appetite. They're not comfortable with that. It's okay when there's no right or wrong. It's just that's how I look at it I mean, buying in, you must make money when you buy I think that's how I think about the property market when I look at investment.
Yep, value investing and buy low, sell high, and buy is undervalue, right? When you buy undervalue, everything is good. Yield is good, even you're renting it out. Even if you stay in, you have your equity there, right?
Correct.
So everything looks
correct.
good when you buy low.
Correct.
All right. So, okay. So I mean to say, we have actually gone. It's now 11:15. Maybe we can do a few more questions. I mean to say, if you guys are happy, are okay to stay on.
Sure.
So let's start with this one. This one is Yong Xiang. Yung Xiang. All right. Yung Xiang would like to know, in the same location, right? Some tips on subsale versus new property launches. Which one will be which one is more suitable for the buyers, all right? Or any tips or any like consideration, like, okay, so if you are into this, then you go into sub-sale. If you are into that, then you might want to consider new property launches. This from Yung Xiang. Maybe David lah. Give Jonathan some rest time lah. David rest time lah.
I think for between sub-sales and new launches, usually I'll tell my friend like the same thing. If you have the cash flow, then you may want to consider some undervalue sub-sales. If you are tight on the cash flow, but you are okay to pay every month then for the installment, then look into new launches. But of course, depends on what kind of property you're looking into. But if the place, say, if you are looking at the area, the whole area, that's all the landed, then suddenly they build a condo, that's new launches, then that one is a totally different story already. Yeah. Then what kind of potential you're talking about? Because if you're buying a landed, definitely the rental yield is not as much as a condo. Yeah. You can see in the market, probably it's very much difference between these two types of property in terms of rental yield from every month, year to year basis. It's actually very much difference. But of course, landed, you get capital appreciation at the end of the day. But you need to hold it for some 3, 5 to 10 years. Yeah. The time does matters. It depends on your appetite and your time frame of investment, I would say. Yeah.
How about Jonathan?
So I echo what David is saying. Basically, it's all about your capacity in liquidity. That's why liquidity is important, to understand what's your level of liquidity from credit to cash. And I think both are good opportunities, but when you buy low, again, you have a sell high opportunity. You make more margins there, but it costs you more money to get that margin, right? So it comes back to what's the level of liquidity that you have. And there's some development, don't get me wrong, there's some development may do better than the existing market one. It may because of trend. Now, one of the things that we don't talk a lot about is trend. Trend, it's something that is unpredictable sometimes. I give an example today. If I have a condo in SS2, the condo may sell more expensive than the landed houses, because there is a trend demand for that kind of property in that area. For example, I give an example. So trend is also very critical to understand. And looking at the new consumer, the younger people, and okay, I'm also younger people, always here are younger people, but what I'm saying about new home buyers, they're thinking about trend, the utilization of space, their understanding of lifestyle, it's very different. So if I smack a different kind of development, stratified development inside SS2, for example, you'll be very surprised that that particular condo could cost more than the landed houses there because of trend. So watch out for that part as well. And that is that convergence of trend versus value, right? Which sometimes is very hard to predict one. So I think both have options, both have opportunities. And again, there is this thinking, or this kind of movement towards lifestyle living, or living in a kind of a location where I have got a lot of trendy stuff going on. I can stay in a smaller house, but I want a lot of things inside the condo that can help me feel good about my lifestyle. So trend is very critical as well. I have seen that happen. I'm not sure whether I'm making much. It's a lot of nuances here, but trend and lifestyle, it's also important to look at that consideration to answer KS Ao's question. But yes, so I think both have opportunities.
I see. Okay. Actually, as Jonathan is actually answering the question, I'm actually analyzing all the questions that's being posted. And I believe that I'm going to echo Jonathan's point where actually, if you know yourself, I mean, if you know what is your goals, what is your objective, for buying your next piece of property, then you will actually make better. Then all these objective, right, will actually guide your decisions, whether it is to buy a new development, or is it to buy an old condo or old development, or is it to get into a freehold or leasehold, whatsoever. All these things, all these answers will be all these things will, it will trickle down, and then it will be taken care of lah. Once you know your objective well lah. But the problem is most humans don't. Most people may not know what they want, and what they are getting themselves into lah. So even if you ask people the simplest question, oh, for your next property, are you going to buy for investment or are you going to buy for your own stay? They also like, can't it be both? That kind of stuff lah. So maybe you can give our audience some guidance as to how do you actually know, how do you plan out your objective? Like Jonathan, you seems to be like, what you had in mind very clearly, but not so for a lot of people. So maybe you can give us some tips on how to know yourself better when it comes to your next property purchase.
I would give you a very simple accounting understanding. I'm not an accounting person, but I look at things very simple. I look at expense and inflation. What's your 1 year expense? So if I ask everyone to do a simple exercise today, let's write down your 1 year expense. Now, expense meaning the things that you have to pay and the things that you want to do. I will put that as one lump sum. What's my annual expense, my fun time, my holiday time, my children's education, my savings? What does that look like for you in 1 year? Multiply by the next 20 or 30. Okay, now you get a number already. Now, how do you hit that number faster? How do you hit that number within 30 years? So 30 years to get you there. What if you can do it in 10, 15 years? What does that look like? Start with something like that to cover this whole expense that you have right now. Start with that thinking, right? So if I acquire a set of 3 million or 5 million, what does that look like for me in the next 10, 15 years? Is it going to cover what I want to achieve every year for the next 30 years? I'm not sure whether it makes sense or not. It's basically coming back to understanding what's your number. And every number is good. Everybody's number is going to be very different. Now, I started simply in the early age of 20s. In my 20s, I saw a client because I was doing real estate at the early age of 20s and 23. So I was serving a lot of $1 million clients, right? And then I was walking into my office of a client. And this is a real story. And he had a magazine on his table called Millionaire Asia. And in those days, Millionaire Asia was given to auto-subscribe to a person when his assets in the bank is liquid more than $1 million. You will get subscription to that magazine. And that was my goal. Wow, if I can have $1 million by the age of 35 years old, that's what I want. So I set a goal like that based on that simplistic thinking. If I go backwards, right, and I ask myself, what's my annual income as a single, annual income as a family, annual income as a family of 3 or 4, and I want to try to do that in the next 15 years rather than 30 years, what would that look like for me? What kind of asset must I acquire? I will start with something like that first. Now, if you're an individual single person right now, ask yourself this question: how do I earn the same amount of income I'm earning through my investment right now in the next 5 to 10 years? So think things like that. Be clear about things like that. When you think of it that way, right, you put it back to a lifestyle that you pack into yourself, your big why. You then begin to be motivated or be clear on why you want to achieve what you want to achieve. That's important. You got to know your number. You got to know your goal. And the goal cannot be so complex. It should be simple. It should be very, very simple. So I give you an example of my current goal now. I'm very explicit on my life one. My current goal is if I could, at the age of, by the age of 45 or 50, all my son's expenses taken care of, college fees all taken care of, house all paid off. That's what I want. That's the goal. Right? So what do I need to do to get there? invest in my time, my business, in my work, and my investment. So we've got to be very clear about it. Now, one of the dangers that I used to step into is I read too many books about how to make money when I sleep. I put too much effort on investment that I forgot about my active income, passive and active income, right? We think that passive income should take over active income. It shouldn't. Your active income should be strong. Your passive income should support you and help you go through it. This is how I look at it. But it will come to a point in time, your passive income is equivalent to your active income. Then you have a choice. You buy yourself a choice. You decide, now I don't want to work. I want to look at my passive income. It's a choice. But before that, right, a lot of people try to go into the passive income first without looking at the active income. Now, not many people can succeed in that. That is dangerous. So think about how do you improve your active income so that your passive income can help you, support you. And there's one point in time you will meet together. The passive and active income will meet together. And that's when you have a choice to decide how you want to live your life. It's not complex, guys. It's not complex. Unless you're trying to be Warren Buffett or Elon Musk, that's a different lifestyle. I'm not going to live that lifestyle. I'm very clear. I don't want that, right? Different lifestyle is a choice, right? But my choice is, how can I live a comfortable lifestyle? Everything is taken care of. My investment supports my goals in life, and that's good enough. So set a simple goal. It could be as simple as, I want to have net income or net asset value of 1 million ringgit by the age of 15 or 20 to 35 years old. Set a goal. And you'll be surprised as you set simple goals, you begin to change the way you think about business and investment. You start to think, oh, actually, goals are more important, right, than the effort. So setting goals are critical. So my advice, Ian, to everyone is set simple goals. And you go back to your annual income and look from the annual income standpoint, multiply of 10, 15, 20. What does that look like? How can you help yourself get there? I look at it that way.
All right. How about David? Do any of your clients actually say, "Oh, I do not know, like you ask me simple question. What do you want? I don't know." How do you resolve this kind of issue as a experienced agent like yourself? How do you guide your buyers?
Usually we'll sit down and work on the I look at the client's willingness on their the budget they willing to afford, and also on their capacity itself, because I don't want them to get into something they couldn't afford. Then at the end of the day, they were like, "Oh, you are getting me into a trouble." Buying a house is a very happy thing. I think buying a property, whether for investment or anything, is a happy thing to share about. It's a happiness. So you don't want to get into trouble with that. Yeah, for me, I think so lah. So usually I would sit down and talk to them, and actually to find out their needs. Yeah. Yeah. But of course, at the moment, what are their needs at the moment? But of course, if they can afford more, of course, we are talking about is their want. Yeah. And that one is a different story.
Casey, any inputs?
I enjoyed the sharing from Jonathan and David. So sorry, I got to move already. So Ian, I'll leave it to you to take care of the whole webinar.
Yeah.
Thank you, everybody. So sorry
Bye,
that I have to leave. Thanks, Jonathan. Bye-bye.
Bye.
No problem. I will take it from here. So, all right, Casey is left off the hook. So how much time do we have? Perhaps we can do two more questions before we end this webinar session.
Sure.
Let me just choose one of the question. Let's see. Okay, so this one is an interesting one. All right. So this one is from Rosia. Rosia says, okay, I'll just rephrase the question because she says, now there's a situation where there's like old condo, but it's located in a prime area. And then we have the newer condo in a not so prime area. All right, maybe it's just beside the prime area, or maybe it's just a spill over to the new area. but with new facility. So when it comes to these two different kind of products, what are your thoughts about this? Maybe we start off with Jonathan.
I will look at data.
Mhm.
I will look at trend for the past 5 years in both locations, both particular condos, and I will try to see what's the trend like. Is the trend pick up? That's why I was talking to a real estate agent. When you talk to some of our agents, like David, he will pull out the data labs that we have, and we will pull out the trends, and we start looking at trends first. Meaning, I want to see if condo A, which is the old condo B is the new condo, right? Condo A, how many transactions in the past 10, 15 years? Condo B, how many transactions so far?
Mhm.
I look at that trend first, and I want to plot and see where is it heading, right? And you'll be surprised because of location and vicinity. This one may do better than that one. Give an example, classic example. Mont Kiara condo, old condo versus condo Kepong new condo.
Mm. Okay.
You should have better rental yield.
Mont Kiara. I suppose I just
You're right. You're absolutely right. It's no brainer, right? Opposite international school. 25 years old. I own a unit there. 23 years old condo. Lot of problem. Every day burst pipe, blah, this, like, all lot of problem. Old condo, but it's walking distance to the international school. Rental year is about 2,500, 3,000 ringgit. The Kepong one, same value. Rental year is about 800 to 1,500 ringgit. So, which is better in terms of your affordability? You think about it. Then you look at the capital gain opportunity. The newer properties may have better capital gain because it's trendier. People might want to buy more. But when it comes to this kind of location, right, it's a bit nuanced. So I look at trend. And it all depends on your goal. What goal is it that you're looking at? You're looking at long-term yields, safety net, or you're looking at a little bit of yield not so good, never mind, but I want to take a risk that I earn more capital gain. Either way, there's no right or wrong, it's a choice. But I will look at the data and trend first. Then I study, then from there I make decision. I don't like to make decision based on, because it's newer, I feel that maybe someone will buy it. I look at data, see how many people have bought it. See how many people have, I give you a classic example, Damansara Perdana versus Soho and a residential condo. There are Sohos and there are residential condos there. The residential condos does better than the Sohos there in terms of yield and also in terms of resellability because there are more people preferring this kind of property. So when I look at the trend of buying trends, right, which is more preferred, I would look at that as an indicator. But again, my appetite is I'm a very safe person. I always tell people I'm a chicken investor. I don't like to lose money one. So my objective is to protect. Again, this is just my rule, my set of rules again. So I would evaluate based on trend. I will study the data. It may be that new one is actually better. It possible one. It is actually very possible. It is very possible. So look at the trend and look at the data before you make a decision. And you also look at surrounding location, that particular block of the new ones. What do they have around there as well? What's the data looking at, right? Be data driven in your decision. I promise you, when you look at data, you will feel more comfortable in how you think about the property. That's my advice.
So, Jonathan, just a quick one. When you talk about data, like old condo, maybe you can have data, all right? Maybe it's easier to have data because it's old, established, in a mature location, all well developed, all sweet, all very nice, isn't it? So, but new condo is like, new launches. Then how do we know about
new launches? New launches is different. New launches I cannot see, but you're talking about both existing one,
Let's say it's a new one, like some developer come out with a new thing, and then they are gonna tell, and then typically agents will tell you like, in this landed or condo surrounding it, we are going to have, means don't know yet lah.
So you're talking about under construction, not completed. You're talking about under construction, is it? Because be very clear. If you're talking about under construction, then I will study the trend in that location. What is that location trend looking like? How is the demand in that location? Because if, for example, if that location, it could be the landed houses is R1 million, you are selling 2 million ringgit condo.
Okay.
Makes sense or not? So it's still coming back to data. Data will tell you buyer behavior and trend. So the data is important. It's still important. You are able to still see trend with data, because through time, the area, unless the whole area is a brand new location, that's a different thing. That's a different conversation already. But you're talking about a new block I'm going to build there. What's the surrounding data of the properties over there? How does that look like? Right. Then I will study from there lah.
David, old versus new.
Oh, it's new. I would think that you have to check on the amenities around the area, because you're talking about both different location, right?
Surrounding lah. Let's neighboring lah.
I would say you have to check on the accessibility, amenities, and all this. If and also the price for sub-sales and a new launches definitely is very much different already. Then the rental yield would be very much different. If you are talking about an area, probably they can afford only at the area, the old one, probably they are renting at 1,500 for 3 bedrooms. Then the new one, you won't expect them to rent at 3,000 for 3 bedrooms. That is a bit hard, I would say. It could happen, but it's, I would say it's very, it's a challenge for the market to move forward, because the market there has been shaped like this, and then you want to move it forward to a league like double from the old one. I'm not sure whether it will happen, but it's possible. But yeah, what are the available catalysts that are around this area to push it forward?
All right. Final question for both of you guys. This one is like Eddie Wong. All right. Eddie would like to ask this. Okay, long one, but then the answer, right, requires both of you to be a little bit creative. Let's see. So this guy, he says he's 50 years old. Already owned 4 residential and commercial properties. Okay, so 50-year-old guy with 4 properties. So he's asking for 2 things. Number 1 is that, do you think Klang Valley has overhang for a long time with too many condos and service apartments? Number 2, your advice to invest between more properties and growing and potential shares at this moment. So Eddie Wong is actually asking these 2 questions. Maybe Jonathan.
Sorry, can you repeat the second part of the question?
He's asking, so he already have 4 properties. So the question is that, should he get the 5th, 6th, or 7th properties, or should he just go and buy shares?
Buy shares. Okay. Okay, so the first question is, do we have an overhang problem? Yes, we do. We have an overhang problem. It's very clear. Overhang problem. Be careful what you buy. Overhang is there. Be very, very careful. Second part of the question is, again, I don't know what is your goal in life. I would imagine if I'm 50 years old today, I'm not 50 years, I'm very far away from 50. Okay. I imagine today, if I'm 50 years old, I have the assets that you have. I'm assuming all the assets are giving you positive cash flow. I'm assuming you're all in a good position or in the money position. Then ask myself, what's my next goal? Is it accumulating wealth to build more income? Or is it accumulating wealth to pass on to the next generation? Whatever it is. So be very clear of the goal. When you come to this kind of level of investment, I would look at considering either I swap my portfolio for higher, better yield, or I find someone to manage for me the money that I have, right? Both ways work. It depends on what you want. Personally, I like to take things a little bit more easier. That's just my style. I want to enjoy my life a little bit more. I would take a seat back and make things easy for myself and ask myself, if I have X amount of cash, how can I earn that income annually through someone managing the fund for me? I may do that, right? I may consider doing that. I wouldn't do it by myself. The one thing I know, when I come to a certain age, if I have certain amount of assets, a portfolio, and cash, I'm very clear. I want to leave it to a professional to do it for me, because I believe that's their job. Pay them some money, get someone to do it for you. Your life is a lot easier and simpler. I'm not the kind of person that will stay in front of the screen and look at my TV screen 24/7, looking at the stocks and looking at crypto here, options here, Malaysian market, US market. I cannot do that. That's not me. So come to a point where you might want to hire a professional person to look into some of your portfolio, convert some of your assets into cash so that you can create income streams through that. Once you have a certain amount of cash and liquidity, right? Creating the income is not that difficult. Creating a yield of 7-8% through property to someone that is managing it for you may not be that difficult. So that's the way I look at it. I like to take a sit back and become life easier. But if you're like the guy that, no, I like to play and like to go into the game, by all means, go ahead. But because of age and also because of borrowing, no, it's a bit, it could be challenging. It could be challenging because of the liquidity that you have in terms of credit. So, well, depends on what you want. Sorry, I forgot his name, but depends on what you want. But I like to take life easier. Life is very short. There's only one life on this planet. And I want to make sure that my life is lived fully in a certain things that matters to me. So again, I don't know what matters to you, but think about life and look at your lifestyle and ask yourself what kind of lifestyle you want. Would this help you?
Right. How about David? What's your take on this?
Okay, for that, can I share the screen on our number or contact info?
Yeah, sure.
Okay. I would think that at the age of 50, then you are still thinking about property. Probably you are thinking of leaving a legacy for your children.
Mm.
Yeah. So I have experience actually investing in doing investment during my tertiary studies to support my studies that time. So understand that it's not easy to, you have to seriously sitting down looking at the data and do all the charting and all this to finally make a decision. And then it's whether your heart can take it. Then I have experienced my friend actually, this friend of mine, they actually went for a lot of investment class and all this. Then they were talking about value investment. Then this day they are making about 200% from the gain. And then during that day, they didn't sell after they get the amount of gain. But within 2 weeks later, the market actually shot. So the gain actually became some 50% or so like that. Whether it's something you can get to it. Whether it's something you can take it. It's a thing for me too. Because and then you're talking about property and this investment class stock is very different, the asset class. First of all, you have to think of the liquidity and all this. Of course, shares you can sell whenever you make some gains, or even if you don't mind, you sell it at loss. And the amount probably you can control it. And then property, of course, is very much different. If you are just like if you are desperately selling and you need the cash, then that one is very different, very efficient. And people probably have the opportunity to bargain with you. Yeah. Then of course, property has always been a tool for people to, hedge inflation, preserve their capital value. If you're thinking about leaving a legacy for your children, I think that one is something that you can go for it. Yeah.
Right. So I guess, yep. Thank you so much, guys. I mean, Jonathan, David, for coming onto the show. I mean, right now it's like 11:45, super duper OT. I mean to say, when it comes to this webinar session. And I'm sure that, I mean to say, looking at the amount of questions, right, I hope that, I mean to say, there's a lot of potential, a lot of topics. After all, real estate is a hot topic, I mean to say, when it comes to finances. And I'm very sure that we will actually arrange a session to actually bring both of you back to actually address more of these kind of questions in the near future. All right. So guys, I mean to say, thank you so much for attending this webinar session. Next week, it's just me and Casey. We will be presenting something related to financial planning and stuff like that. And stay tuned for our webinar invites. But of course, for more details about how you can actually make better property investing decisions for 2023, either you can contact Jonathan Lee, who is the CEO of KW Malaysia. So this is actually his link. So you can actually screenshot this and contact Jonathan Lee via this link. Or alternatively, just phone up or WhatsApp David Chee, who is a real estate negotiator with Reapfield Malaysia. So this is the number to go to, 016-749-0430. All right. I'm sure that he will be able to assist you in all your property matters. All right. Just just phone him up, and I trust that he will actually give his most professional advice to you when it comes to your property matters. Okay, so with that, thank you so much all for attending. I think it's a very fruitful session for myself. And guys, let's go for lunch. Thank you
See
so
you
much
guys.
for coming.
Bye. Take care.
Thank
Bye.
you.
Bye, everyone.
Bye.
Bye bye.